Hello and welcome, everybody. Happy Canada Day. Thanks for joining us here on SF Live on this national holiday. Really appreciate it. Thanks for your time and thanks for your interest. Really appreciate that. In a few short seconds, we'll be joined by Jamie Strauss. He's the founder of the Digbee, a tool, a software, a program, and a soon-to-be standard, in my opinion, in the mining sector. And I can't wait to speak to Jamie because it's all about ESG, implementing ESG, reporting on ESG. And since we're active in the junior mining space a lot, we're going to focus on how we can implement his tools and his reports into our sector on the smaller end of the scale. Really excited to have his opinions on that and how we can make that work. Also, two things. This is an interactive format. So if you're watching us on YouTube, use the YouTube chat for your questions. If you're following us on Twitter, use the hashtag AskESG. We use that hashtag and you can put those questions in. We'll see those pop up and get those questions asked and answered by Jamie during our conversation or at the end of it as well. And more importantly as well, also follow us on YouTube, follow us on Twitter, hit the like and subscribe button. Don't forget to turn on the bell notification as well. We do all our interviews live, so make sure you use that to your advantage. And we often have CEOs on. We talk about news that just came out that morning, so make sure to use that to your advantage and follow us. Now, enough of that. Let me switch over to my guest. And it is my pleasure to introduce Jamie Strauss. And Jamie, we've met a couple times in the past, and it's great to have you on to talk about this really, really important topic. And thanks for joining us, Jamie. Good to see you.
Thanks, Kai, and really happy to be here, and happy Canada Day to all your viewers.
Thank you. Appreciate that. Let's start with a quick introduction. A, who are you? And B, what is the Digby?
Okay, so Jamie Strauss, I've been in the mining finance industry out of London, UK for the last 30 odd years. I guess peak of that career was managing director in the UK at BMO, an organization you will all know. I've been on a number of different mining boards. Probably most people will know me on Altius Minerals and Gold Standard Ventures. And I set up Digbee about 5 years ago. But really kind of moved up a few gears when we launched the ESG earlier this year, having been encouraged to do it by a number of people in the capital markets last year.
That is really interesting because I want to see like what the demand drivers for this is as well. It's not just, let's call it supply, meaning the mining companies supplying some ESG reports. And one word you've used in the past is greenwashing. Right, so we're going to get to that in a second as well. But lead us through that, like the idea of setting something like that up, and who gave you that input, what triggered it. Let's run us a bit through the history of the Digbee there.
Yeah, I set up Digbee initially in 2016 with a plan to, which is still very much live and valid, is to come up with a form of research or due diligence, which was previously due diligence was unaffordable by institutions and private individuals. You know, it cost $50,000, $100,000 ago to understand the technical bits and pieces behind a 43101. And so how could you use an expert network, give them greater connection into the investor world, making sure that they earned money through selling research to a standardized structure, totally objectively, and trying to demystify geology, metallurgy, and engineering, so that we can ultimately mitigate risk and ultimately get better results throughout the entire ecosystem of mining. And that was really the thought process behind. We set up a large database, which is freely available to anybody. It covers 1,400 projects, 4,500 economic studies globally. Anybody can just sign on and get access to that. And so we set that up as a kind of the spine of the business and then added research onto it. But when we were launching the research the beginning of last year, it was BlackRock and Orion Mine Finance who reached out to me, both within the same week, saying, you've got to use this platform. You've got to use this platform to come up with a solution to help the junior miners effectively deal with ESG. And so we did a bit of research at the time. And we really came to and actually I'd just come off a board meeting with a company, and it became fairly obvious to me what the problem was, and it was twofold. It was on one side, it was the wow from the miners and the management teams. What do we disclose? We know we've got to do this, but what do we disclose? How do we do it? I know we've been practicing ESG for a decade, 2 decades, 3 decades. That's called a social license. But what do we disclose and how do we do it? But also on the investor side is we need to be able to simply understand in a standardized form certain credentials of ESG and how that can then be compared and contrasted between one company and another on an apples for apples basis. So the issue was both sides. It was completely unstandardized. Nobody was helping the juniors. If you talk to any of the investors beyond our little pool of capital of the mining spaces, all they want is a means to credibly track ESG on a standardized basis. If they do that, there's a wall of money for this industry.
That is an interesting aspect because it all comes down to money at some point, right? And you mentioned BlackRock and Orion. BlackRock, one of the world's largest funds, obviously, and Orion, one of the bigger private equity entities in the space. And you mentioned junior mining. Maybe we need to define that a little bit for me because there are various aspects to that. Like, how do you define junior mining?
So actually, what I should say is junior mining, which is what this initiated from, this will be appropriate for any mining company. It could go from Rio Tinto all the way down to a small private company exploring anywhere in the world. But what I disclose, as I suppose we'll talk about in junior mining, is from the smaller producers all the way down to, as I say, the smallest company exploring. So, and I think with regards to BlackRock, I think they want the whole industry onto a standardized format, and that makes sense for any fund manager. It's helping them define how this whole thing is going to be able to work, and they compare and contrast. For a group like Orion, their main focus is these developers and how we can effectively get that bulk of due diligence of ESG done, mitigate, and also from other people. For producers, Kai, M&A is critical for this industry. ESG is going to be required in every single company, whether it's private or public, however big or small it is. And M&A is critical. And if you don't address the friction of ESG within M&A, then that's going to become more and more difficult to happen. And then we lose, one of the great benefits and rewards in the sector.
Really interesting. Like this topic, we could go on for hours, actually. There are a lot of rabbit holes we can dive into. But I want to stick with BlackRock just for a second, because they are known only to invest in bigger companies as well. Like you rarely see them dabble in a 10 million market cap company for various reasons. Liquidity is one. Asking for these reports, like, have they shown any indication that they might open up their investment mandates to say, if these companies really fulfill what we're looking for, we can open our wallets and go down lower in the value chain?
You really need to ask them that. So I'll talk from my own perspective. I don't think necessarily that is going to change, but I think anything you can do to help a fund, whether it's BlackRock, JP Morgan, or anybody, have greater clarity and disclosure in what they're doing. And therefore, I've broked many companies to BlackRock in the past, and one of their key things is, what does the management team promise to do? And what have they then delivered in subsequent meetings, and have they met those promises? So I can't talk for BlackRock as to what their strategy is going to be next year or the year after with regards to smaller companies, but they do invest in explorers and developers at certain times of the cycle. I've been a recipient in a couple of companies I've been on board of, which BlackRock have been shareholders of. I think it's too early to tell whether or not having greater transparency in ESG will effectively allow that specific name into the smaller companies. But I think it will open up more pools of capital and more names to go to, and opening doors for all sorts of companies as credibility and confidence improves in this industry through this.
Like at some point, we also have to define ESG, because I often have the feeling it's really like honed down. Just people focus on the E part to a degree, because we are in BC here, like British Columbia, First Nations is a big issue. So social does play an aspect, but governance, especially on the junior end, always is ignored based on what I see in the sector as well. Like it's almost like an ES discussion without the G. Right. So like, how does that factor in? Like, do you have different variants or levels also of disclosures at various exchanges? Does let's just for assumption say the TSX rank higher than the CSE, for example, in your reports? Is that part of it?
No, this is really kind of a global thing, and we recognize the fact that different jurisdictions actually have different meanings for certain things. But you want to follow Mark Carney, who's one of your countrymen, with TCFD, et cetera, et cetera, et cetera. This is a global thing, and it is fair to say that the newsprint at the moment is all related to the E and global warming. Actually, not even just E, global warming. But nature and biodiversity is a really important part within the mining sphere of, and actually in Canadian law with regards to building a mine. So, but ESG is much broader than that. and actually going back to a conversation at PDAC this year, which Evie Hambro and Mark Bristow were jointly doing an interview, where Mark Bristow, I think, highlighted the fact that it's S, which is so important for this industry. E is relatively binary. You're either reducing your emissions or you're not. And admittedly, for an explorer, that's maybe a little bit more difficult and less relevant given the quantum. But it's the S which this industry can have such a big impact. You mentioned First Nations, but globally, the S has such a big impact. And we know within this industry, we're very bad at promoting it, but we know in this industry that we've actually been doing a huge amount of good, by and large, throughout the last 20 years, which needs to be showcased. And if you go to the G7 presentation that we gave, and Evie Hambro at BlackRock endorsing the product, he highlighted the need to showcase mining and therefore to win confidence, win the hearts and minds of society, and ultimately open those doors.
Now, being in the industry, obviously, I'm hugely biased, of course, and I think we are doing a lot of the right things. And for me, like having had a lot of conversations about battery metals in the last few weeks, and we hosted a mini conference as well. For me, it comes also down to to the recycling and the value chain, or upstream now as well. Like what are the Teslas, the Apples of the world doing in that regard? And from a personal perspective, I'm just about to put a solar roof on my house, or solar panels on my house, and I'm looking at the wall box, and there's no information in the proposal I got like on where's the material coming from, where's the battery coming from, and all of that, the input. I think that's also a big part of ESG, in my opinion, that the consumer should focus on a bit more. Right, I'm getting a bit off topic here, but I find this hugely impactful and important, right?
So I'm annoyed with myself that I can't remember the name of the company off the top of my head, but I had a great presentation by he was a Dutch guy, ex-ABN AMRO, but working with some Vancouver guys on a blockchain with regards to the product effectively for mines. And he wants to incorporate ESG from the mine site then all the way through that product within his blockchain. And to me, this is real. This is going to happen. He's testing with some of the big majors of the world, and there's no reason why that can't be rolled out. It makes complete sense, and you're absolutely right. Complete transparency from mine mouth through to product is now possible. It's just a matter of us all getting together, getting on board with it, signing up to this and doing it. And it's not an unreasonable bureaucratic burden. We're making sure from our point of view at MineSite that disclosure of ESG is simple, but it's also a value add in many different ways.
Yeah. Glad you brought up the G7 before we talk more junior mining on the junior end of the spectrum. Like the G7 was a big media event, of course, as well. Lots of talk about it. How did you guys participate? How did the Digbee, how did you get invited? I'm really curious, in what were you able to contribute and maybe facilitate some change there, or what are the results of that as well?
Yeah, it's actually, it's in a way, it's even bigger than what it sounds, because we were working with the Department of Trade and Industry, which is the UK's main department for this, and with the mining guys on that side. And the UK, the southwest of England, which is where the G7 happened, is very historically important for mining with tin and copper, but also is having a bit of a rebirth at the moment. Cornish metals, I think, will be the one most relevant to Canada. And I guess the point that I'm trying to get at is I was trying to push for mining to be involved in COP26. And we know COP26 in Glasgow this year is generally positive on mining, but they have a problem with some of the aspects. Scope 3 and ESG is the kind of biggest topic. So I was talking to the Department of Trade and Industry, and they said, can you also present at G7, because that will help bring mining together, bring the whole ethos of mining, particularly the new companies, the developers who are embracing ESG, wanting to prove that mining can be done sustainably, don't have the legacy of the majors. And that's not to say that the majors are not doing an awful lot of good to try and get away from that, but that legacy is going to be around their neck for a while. So, but it is the new miners who are wanting to embrace ESG, wanting to embrace all the positivity of sustainability and producing the products which are going to create a sustainable future and a low carbon economy. So it was bringing all of this together, talking to the Department of Trade and Industry, and in effect, then have a launch pad. We're still not there with mining in COP26. I can tell your viewers that. I was talking to them only yesterday. But I think we're on the right path to win that the support for it.
Yeah. Just to fill our viewers in, what's COP26?
So COP26 is basically the UN conference, which is the Paris Accord. People might recognize that, which Canada's a signatory to, which happened, was it 2015? COP26 is the next big chapter of it, which was meant to be in November last year, and it was delayed for obvious reasons to this year. So it's the big UN climate and other kind of connected areas conference.
Fantastic.
Thousands of delegates going in November.
Interesting. Okay. Really, we'll keep an eye on that as well. Let's shift a bit more to the junior end of the spectrum. We have a lot of guests, junior exploration companies, almost from prospector to developer. Producers we only have on rarely. So now I'm trying to figure out how can we implement your reporting, your standards of ESG in general into the junior end. And knowing it, like most of the companies here in Vancouver, there's like 3 people involved. You got the CEO, you got the CFO, who's often part-time, and you have a VP exploration, right? So,
Okay.
and how do we implement these protocols without putting too much extra burden on these companies? And I mentioned to you before we went live, I'm a bit naive because I'm saying like, well, these companies are all publicly listed. So we do have, as investors, have a choice of who we want to invest in. But how do we, like, as you said, like your goal is to standardize a bit of the reporting. How do we do that on the smaller end where capital is limited, time is potentially limited as well? And I'm not saying that companies don't want to do it. I'm just curious to figure out how can we implement that. So I'm curious to hear your suggestions there.
So fully transparent, so that we're not trying to pull the blind over anybody. It is corporate paid. We hope to be able to help the very smallest company once we've moved a little bit further on ourselves and get this kind of slightly wider. We only launched in March with the exploration framework. So but it is corporate paid. It's then free to access by any third party, whether it's First Nations or fund managers, private equity, anybody they want. So that's the first thing. How do we make it easy? Well, first of all, this was designed specifically for that purpose. We know all of these management groups want to promote or want to highlight that they are above and beyond. They know they've been doing a lot of this work. How do we showcase that? So we needed to make sure that we had a standardized structure which related to the whole sector, which was recognized by the investment community and others, and making sure that that standardized set of questions was easily answerable by the existing people within the organization. So when we get to a producing framework, which we'll launch in September, that might include, that's probably going to include an environmental person or something like that. But then they've got the resources to do that. For the explorers and for the developers, this by and large can be handled within their existing people. However, there are consultants around, and we want to embrace the consultants. We want to pull them in and use them because they can add so much benefit to these companies, not just from the assessment point of view, but then improving it from one year to another as you go forward. So this is all inclusive. We're trying to do it in stages, but the question set is right sized. So there's an exploration framework, a development framework, which is the cutoff is PFS, and then obviously the producer framework. It's completely free for them to access. All they have to do is sign up onto Digby. We actually came off beta test today, so they can literally just go in, sign up, get it, and they get the blueprint to effectively disclose. So they can do everything for free up until they submit to us. And it's only then that we raise an invoice. So hopefully in that, I know you're a bit tight for time, hopefully that's given you the answer. This is designed to help them and then showcase the answer at the end of the day to the fund managers, whoever they want to.
Yeah. It's interesting because you already have quite a few clients. You mentioned BlackRock and Orion, and are they already willing to pay a premium for that information? Because in the end, do companies stand out? And I know a couple of companies that I absolutely love what they're doing on the ESG side. But let's say you have to raise money and you have to allocate, let's say 20%. I don't know, 20% might be a bit a lot, or 10% on the ESG instead of just drilling. You have to add 10% for ESG work, maybe a consultant and stuff. Are the companies or the investors willing to accept that, let's say, extra bit of dilution at this point to make it happen? And that's what I'm also trying to understand for the market, like the investors to embrace this more actively.
So in a simple word, the answer is yes. A little bit more detail, though, is in 2 or 3 years' time, that's going to be a major factor of this. I think at the moment, the pool of capital available to you is growing if you are embracing ESG. At the moment, you can still get away by not, particularly as an explorer, in not having disclosed. We're at an early stage of this evolution, but there is no doubt in my mind that the doors are closing for those who are not. but the doors are opening for those who are. And that will ultimately mean that the cost of capital will be different to those who do and those who don't, and those who are improving on an annual assessment to those who effectively are falling behind. But nobody at the moment should be concerned by a single score in potentially negatively showcasing. We give them the ability to hide, but more importantly, the fund managers aren't looking at a single score. They're looking at an embracement and taking action on the back of that.
No, and I remember listening to one of your interviews you've done with one of my colleagues and friends over at the Mining Stock Daily.
Yeah.
And you just mentioned it, like there's the ability to hide the score, which sounds a bit dodgy, just leaving it out of context there. That's why I want to follow up on it a bit. But you said on that interview, and that I recall that now, is like you want companies to actually have a bad score at first so they can improve. Right? So to see that, and like in a bad score, doesn't mean it's bad what they're doing, but it helps them find areas of improvement as well. And then the following years, you do want to see higher scores as well, right? Can you elaborate on that just for a second?
Yeah, so just to be clear with the hiding the score, what we do is we allow the inaugural score to be hidden for up to 13 months. Okay. Although it was interesting that our first client who got their report, where they're about to come out with some testimonials from it and everything, but it's been a huge success for them and I guess for us as well, because they've learned so much. They know the plans they've now got to do so that they can effectively do it. So they're actually now going to, I think they're now going to publish even before that 13 months is up. So that's really exciting. And they can use that to promote, to talk to their people. But it's only available to hide in their inaugural year for the first 13 months. After that, it will become public. Okay, so they get the chance to do that second one and therefore have a direction of travel, which is what's really important at the moment. I think where this comes down to also is how do we address the greenwash argument? Because greenwash is prevalent in the world at large, not specific to mining. And what we've done is we've turned the whole thing upside down to address that head on. So it's project focused and goes up to the corporate rather than the other way down. The board of directors needs to have involvement to sign off on the final submission. So that's taking the weight of responsibility up. It's evidence-based. You've got to support specific evidence to support certain questions. It's transparent, and ultimately you've got 2 ESG experts looking at this so that they can effectively assess it appropriately. But it's coming from a positive angle, Kai. It's really important that we're trying to support this industry. We're trying to help the industry get over this hurdle of how do they go from where they are now and showcase what they're doing and then effectively improve on it on the ground, which will ultimately bring in, hopefully, new shareholders, capital and supporters.
It'd be interesting to see, because Beaver Creek conference season is coming up. We're doing more in-person meetings. How many of those companies at some point, like this year might be a bit soon, but like will it actually give you a piece of paper, say this is our ESG score, or include it in their PowerPoints as well? Yeah. So I'm really curious to see that transformation, because we've seen a couple other technical advances like Verify, for example, that make their way into and I see that as the same thing. Like people will start embracing it almost as a marketing tool as well, because they do want to do well. Right, that they are on the right path, and that's another way of marketing their story. So I'm really curious to see that.
I guess you were hacking into my computer earlier this afternoon, because we've just completed our mock-up for company presentations as to what they can put in, because at the moment you've got a sustainability 2 or 3 slides, which basically said this is what we've done, which, with all due respect, that's people almost marketing a good story and possibly leaving out areas which are not so good. This is a third-party validated score, which is easily presentable. You can add bullet points as to what you're going to do to improve, and it just comes out and it's in 2 pages. And I agree with you entirely. Verify have transformed presentations of mining companies. It's made it easier. It's made it more visual, and that's exactly what we're trying to do. Get rid of the confusion, bring it forward, make it easier for companies, and then encourage new pools of capital and others to support this industry.
Fantastic. Hey, Jamie, I'm super excited that we got a chance to chat today. Let's get the word out. I think this is a super important thing, and you're definitely on the right track. I can't wait to see it being implemented more and more. It will take a bit to see it happen, but I'm excited to go to conferences and actually be presented and in conversations as well. Jamie, thanks so much. Keep up the good work, and all the best, and catch up very, very soon.
Kai, thanks very much indeed. Really enjoyed it.
Fantastic. Everybody else, thanks for tuning in. This was SF Live episode 203 already. Happy Canada Day again. Thanks for joining us. And make sure to follow us on YouTube, follow us on Twitter. And don't forget to hit the like and subscribe button and turn that bell notification on as well. Thanks so much. And we'll be back in August. This is the last one before I go on break.
Oh, wow.
Fantastic. Everybody else, we'll see you in August. Enjoy the summer break, and we'll be back